Hey guys, it's James, and I wanted to take a look at XYLG and JEPI, or also known as JEPI. XYLG is Global X's S&P 500 covered call and growth ETF, and JEPI is JP Morgan's equity income ETF. I want to take a look at both of their fund pages. And what we're going to do here is take a look at the history of these two funds, gather some information, and then on this calculator here in Google Sheets, we're going to predict the future value of these two funds and see which one is going to outperform the other. Over on Global X's XYLG page, the reasons to consider XYLG: it offers high income potential, upside potential, and monthly distributions or monthly dividends. XYLG seeks to generate income by writing covered calls on the underlying index. By writing calls on 50% of the portfolio, the strategy allows investors to capture half the upside potential of the underlying index, and XYLG expects to make distributions on a monthly basis. A few pieces of information to gather from their website. The fund started on September 18th, 2020. Their expense ratio is 0.6. Their 12-month trailing yield they claim to be 8.1%. Over on JEPI's fund page, JEPI is another high dividend or high distribution ETF, and again, it is an income ETF, primarily to be able to pay you a high distribution or a high yield. Just a few things to read off of JEPI's website. They seek consistent premium income with a lower volatility. JEPI employs a proven bottom-up research process with stock selection based on proprietary risk-adjusted stock ranks, and their options overlay allows for income generation that flexibly adjusts with the market. On the website, since last updated, they claim that JEPI has a 6.99% 12-month rolling yield, and they claim that they are competitively priced versus their peers at 0.35%. Let's go to an independent website and see if we can find some of the same information. Over on Seeking Alpha, XYLG's page, the current NAV price is $29.30 with a 12-month trailing yield of 8.07. So we'll use this number right here. And their expense ratio is 0.60. On JEPI's page on Seeking Alpha, the current NAV price is $59.49. Their trailing 12-month yield is 7.52 with an expense ratio of 0.35. Both of these funds pay a pretty consistent dividend. And for XYLG, the fund has only been around since September of 2020, and they've paid a pretty consistent dividend of about 10 to 13 cents month over month. And then in the month of December 2021, they paid $1.10, which shot up their trailing 12-month yield to about 8%. Whereas if you did not consider the December yield, their yield would be closer to about 4.2%. Over on JEPI's page, they pay a little bit more consistent dividend yield. They've been paying it for close to 2 years here, and it has ranged from, it looks like the bottom of about 25 to 26 cents all the way up to almost close to 55 cents. So let's check the history of these two funds on Portfolio Visualizer. We will look at a month-to-month basis and include the current calendar year up to March 1st or 2nd of 2022 with an initial investment of $10,000. We're not going to add any cash. We'll just look at a $10,000 investment. No rebalancing. We will have dividends reinvested and then take a look at what it would look like without dividends reinvested. And then we would like to see what the income would have been for the very short history of these funds. We come down here and click Analyze the Portfolio. In the blue, we have XYLG, and in the red, we have JEPI. And you can see XYLG slightly outperforms JEPI on an historical basis if you take it all the way back to the inception date of XYLG. If you look at their CAGR ratios, or their cumulative annual growth return, XYLG is sitting at 22.5%, and JEPI is 19.9% with dividends reinvested. We take a look at the annual return, and the only reason JEPI is in front in 2020 is because XYLG's inception date was 3 to 4 months later than JEPI in 2020. However, for the full year of 2021, XYLG paid out a little bit more than JEPI. And so far this year, XYLG is slightly in front of JEPI. Let's take a look at what these funds would look like without reinvesting dividends and see if XYLG still outperforms. And you can see XYLG in the blue is still on top of JEPI for the history going all the way back to September, October of 2020. The CAGR numbers for XYLG drops to 14.4% and JEPI goes to 10.9%. And without dividends reinvested, this CAGR number, we're going to use these numbers right here in my future value for these funds. We'll take a look and maybe we'll drop it a few percentage points and see what we would get over the course of the next 1 to 10 years for these two funds. Over on my fund versus fund calculator, we have all of the fund stats inputted into the calculator. This 8.07% dividend yield for XYLG includes that large December 2021 payout. And this 7.52% includes the 12-month trailing yield for JEPI. We have the expense ratios input into the calculator. Their dividend frequency is monthly, so per share, this is what you can expect for these two funds. We'll leave the monthly addition at 0 currently, and these annual growth rate numbers, we're considering the funds without dividends reinvested. So we will take 14.4% at the current moment and 10.9% for JEPI. And we can choose to have our dividends reinvested or not reinvested. And we'll start with a $300,000 figure, as these are income funds, and most likely you would be investing in these funds at a higher portfolio value to be able to receive income or the distributions. We'll go ahead and change these to not reinvested to see if you had a $300,000 portfolio, how much income would you be receiving if you didn't reinvest dividends? And then how would your portfolio grow as well as you were pulling the dividends out? So we come over to the 10-year graph here, and we can see with a $300,000 investment, without reinvesting dividends, you would have slightly more in XYLG than you would JEPI. Coming over to the income graph, without reinvesting dividends, you would have about $2,000 more annually if you invested in XYLG. And now remember, this includes that large dividend payout in December of 2021. So let's say Global X was not able to do that here in 2022, and that dropped the 12-month trailing yield down closer to that 4 to 5% figure. So let's do 4.5%. At this point, JEPI would end up paying more in income, obviously, having almost a double dividend yield. However, the net asset value of XYLG has been able to outgrow JEPI, so your fund value would look something like this after about 10 years. Let's see what it would look like if you were to take these incomes and reinvest them back into the portfolio. Even though XYLG has a higher CAGR number than JEPI, JEPI's dividend yield with dividends reinvested is able to catch up to XYLG, and the funds are very, very similar in their net asset values. This is the income you would be reinvesting into your portfolios if you had dividends reinvested. Let's drop this number down a little bit. As we know, these funds are only about 1.5 to 2 years old. So let's drop the CAGR numbers down about 4%. So if we dropped that 4% and we drop this 4%, we would be looking at something like this. Portfolios would not grow as fast, but they would still grow. Without dividends reinvested, we would still have our funds grow from $300,000 all the way up to $750,000, and for JEPI, $300,000 all the way up to $560,000. And over here, if you would like $10,000 to $5,000 a month in monthly dividends, you would need $1.3 million in XYLG with the current 4 to 5% dividend yield, and you would need $800,000 in JEPI to receive $5,000 a month in dividends. And in our annual dividends calculation, to receive $100 all the way up to $100,000 in annual dividends, this is how much you would need for XYLG and JEPI. regarding XYLG and JEPI. These funds are very close in their dividend yields and their annual growth numbers, with XYLG slightly outperforming JEPI with that December 2021 yield. So if you are looking for yield and growth in your portfolios, XYLG and JEPI might be the funds to consider. And if you are counting on a large December 2022 payout for XYLG, as we had last year, then XYLG might be the fund for you. Head down into the comments and let me know which fund you would rather invest in. Make sure to hit that like button on this video if you've made it this far. And with that, thanks for watching.